1 year ago, we commenced a tough but necessary journey to get PPC back on solid ground. It wasn't easy to discuss internally the significant gaps and underperformance. But we knew that we needed to reset the old ways of operating and introduce fundamental changes to take the company forward. This reshaping of the core of the organization doesn't happen overnight, but early in the year we started to see traction, revealing a change in trajectory from the second quarter of the financial year. To start delivering ahead of plan is meaningful, taking into consideration the complexity of this process, and more importantly, the quality and sustainability of these results. This year's performance is not a result of a once-off cost-cutting, but rather the outcome of operational improvements, introduction of best practices, and a refocus on our core business drivers. The Awaken the Giant strategy announced last November has already contributed to the group's result in FY25. In a context of restricted growth, we have implemented structural changes that will embed it going forward. As I mentioned, these changes are not once-off, but an aggregation of small action in our internal drivers. Our approach to volume, price, cost management, and contribution margin are becoming systemic, and the improvements we have made are expected to reap benefit going forward. And this makes all the difference when looking at this year's results. Our operating update on our 10 months performance indicated clear progress in our key financial metrics, and most of them have further improved for the full year. The improvement in result is consistent across all the business segments and combine quality earnings growth with improved cash flow generation, resulting in balance sheet strength. Ebitda has grown 28%, reaching 1.59 billion rands, coupled with a step change in Ebitda margin of almost 4 percentage points growth to 16.1. Free cash flow from continuous operations has expanded significantly from 260 million rands in the previous year to over 1 billion rand in FY25. Record dividends from Zimbabwe and the South Africa business resuming a dividend payment. These outstanding metrics support investment that will sustain results growth in the future, the new integrated plan in the Western Cape. With no changes in the macro and market context and no tailwinds, the FY25 results are the highest since FY18, considering the current group portfolio. Plus, and to me a significant plus, we have resumed an ordinary dividend payment from the South Africa business that has not been declared since 2016. FY25 results clearly represent a significant progress today, but we also know the turnaround process takes time and won't be a linear process. Plans are in place, the turnaround is gaining momentum, we have the right team, and we are operating with confidence, clarity, and direction.